Obviously, many stocks are under some pressure from what we're seeing from these Chinese trade talks, what the implications are from all of that. One stock that is under pressure today, shares of Apple. If you want to take a look at the chart, closed on Friday at 211.75. This morning, the bid's at 204.91. The ask is at 205.10. And that's because China has been such a huge component for Apple. Tim Cook talked in the last earnings last week about how things seem to be really improving there. Tim Cook also traveled to Omaha this weekend. He was here for the Berkshire Hathaway annual meeting. It's his first time coming here. But for Berkshire, Apple is now the biggest investment that they have in their equity portfolio. It's also Berkshire is also the third largest investor in shares of Apple. So when we sat down with Tim Cook this weekend, I got the chance to ask him what he thought and how he found out that Berkshire was first buying into shares of Apple. Listen in.
I found out probably like you did, which is the 13F gets filed and somebody tells me about it, and I thought, oh, this is really cool. Warren Buffett is investing in Apple. We welcome all shareholders, but we run the company for the long term. And so the fact that we've got the ultimate long-term investor in the stock is incredible because our interests are aligned. And then I knew Warren before then, but we had no idea they were looking at the company. They do all that obviously secretly and have their own method of doing that. And it's been a privilege, and I'm super happy they've been accumulating.
What happened when you found out? Was there talk around the office? Were there any high fives, or was it oh boy, now what?
It seemed like recognition in a way, like an honor. And a privilege, and I don't mean that in a light-hearted kind of way. I mean, wow, it's Warren Buffett is investing in the company, and and so it felt great, and I think for the whole company, because we knew that he didn't. He's been very clear he didn't invest in technology companies and companies he didn't understand. He's been totally clear with that. And so he obviously views Apple as a consumer company, and in a different kind of way. I think that's really special.
Warren, what did you think hearing this? Because when I told you we were going to tell you how he found out, you said, "Oh, good, I'd like to hear the story." You've never talked to him about that?
I didn't. Not about that specifically. No, I've known Tim a little over the years. I see him maybe at least once a year, and maybe twice a year. And I've talked to him on the phone a few times and sent him a letter. I sent him a Martin Luther King speech some years ago that was kind of lost to history. That was terrific, and I thought he'd enjoy. But no, I didn't call him up while we were buying. I try to keep as quiet as I can when we're buying anything.
China, though, is a huge issue for Apple. It's why the stock had been under pressure earlier this year, or at the end of last year. Last week on the earnings call, it certainly sounded like they thought China, the situation there was improving. What does this news today mean for you?
Well, the important thing is really what the relationship is with China 3 years, 5 years, 10 years, 20 years from now. This all enters in, and certainly it's hard for me to imagine that the two most important countries in the world would do dumb things over a long period of time, but they could. I mean, the possibility always exists that you get miscalculations or egos or national pride or whatever it may be, and that things do escalate. I don't think that'll happen. I know it shouldn't happen. I think it's a low probability, but that would be bad. It'd be bad for everything Berkshire owns. It isn't a question of Apple, or it'd have a very negative effect on our economy, other world economies, and there's a chain reaction of sorts, type of thing. So I don't think it'll happen, but I don't think it's zero, the probability.
You say it would be bad for virtually all the businesses that Berkshire owns, but Apple's in a pretty unique position because it is so front and center, because it's already come up as a potential target for some of these things. Do you think Apple runs a special risk or not?
Well, It would have, I mean, obviously in terms of our electric utility in Iowa, would have a very minor effect relative to other types of businesses. But the ripple effect, if you get a recession, and it hits everything almost eventually. So I think it's very unwise. It's kind of like having if you have a nuclear war, you don't want to say ha ha ha, you know, if you're in Canada because they're only attacking the United States or something. It's impossible to contain it if you have two superpowers in trade involved, and you can't predict exactly how it spreads.
Apple shares are down 3% this morning, just looking at the chart.
Yeah.
That's good. Why?
Well, because they're repurchasing shares, and when they repurchase shares, our interest goes up, and we don't lay out a dime. I love it, you know, and obviously it's better to buy it at X than 2X.
They've said they'll purchase. They've reauthorized up to $75 billion in additional shares. You're behind that? You're in favor of that, I should say.
Wildly in favor of it.
We're going to talk a little bit more about share repurchases, not just with Apple, but more broadly, because it is a question that came up pretty frequently this weekend at the annual meeting, too.
Repurchases can be the dumbest thing in the world or the smartest thing in the world. And I've seen both. But they're just, repurchases by the company are just like purchases by us. They're dumb at one price and they're smart at another price. And I like it when we're invested in companies where they understand that. Many companies just repurchase, and you know, it's the thing to do, and they're encouraged to by some shareholders and by their brokers. And repurchases can be dumb, they can be smart. At Apple, they've been smart.